Well, hello folks, I'm Ellie Little and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, and archived on YouTube under the channel L.A. Little. You can subscribe there. Get it on any device, anywhere, anytime. That's the idea. As far as anytime, anywhere, it's the old market bounce going on here. Pretty nice bounce today. Percent up pretty much across the board. S&Ps were the laggards at about 3/4%, but you had almost a full percent on the Dow, over 1% on the NDX composite, and closing in on 1% on the Russell. Remember, the Russell has been the weakest, has been struggling. If this market's really going to do something, the Russell's going to have to stand up and do something as well. Green up here, well, what does that mean? It's usually red down here, and although it wasn't that red, there was red in commodities again, in particular precious metals, and in bonds. Dollar was up again, another 0.5%, another pretty big spike on the dollar. Oil got a big jump today, big reversal in the XLE, a lot of volume left in there. Maybe we'll take a picture of that. And overall, not bad. Not a bad bounce. The question is can it continue? And that's always kind of the question. And so let's delve into that next. I'm going to spend a little bit more time looking at these tonight, the indexes themselves. There are bounce setups in the sectors for tomorrow, as well as the world markets for tomorrow. So let's dive into the indexes and see if those support the same idea. Let's start with the S&P 500, which is what we usually do, and let's talk about what we have here, because remember we had a bullish retest regen zone that was this high to that low, right? And so we were trying to retest, regenerate. We got up underneath it for a bar, and then today we essentially did a takeaway bar and moved right back up into that range. Now, it's not as if that solves everything, but it did 2 things. Well, did 3 things really. 1 is it got back into the higher range up here. 2, it kind of nullified this whole badness yesterday by doing a takeaway bar. And 3, it got back inside the Fed bar, which is this bar. So it's back into the low, right? Because that low happened to correspond with the low over here on the swing point. You're back into it, you're into the range. That's a good thing. That's exactly what you'd want to see. And volume-wise, volume was a little bit heavier on the downside, which is not what you'd want to see. But we're talking minor. If we divide this up into ranges, you can actually take the top range and take it right to about there, and then the one up underneath it is about equidistance. And so you can see you're right up here testing into that range. So this is going to be the key test tomorrow on this index. Can you get into the higher range? Because if you do, right, then that opens up the possibility of getting to the top of the Fed bar. And the top of the Fed bar would actually get you into the lows of the highs, which have all the volume. Anytime you lay a big high volume high out there, it usually wants to get tested if you get back close to it. Well, where would close to it be? Well, that would be coming right back to the highs of the Fed bar. And matter of fact, that would take you into that bar and give you a shot at getting at the highs. So that to me is kind of the big test. Today it passed the first test, and that is it got back into the Fed bar. That gives it a decent chance to get up to the highs. That is the setup on the S&P 500. Now, the Dow, a little bit different, but the Dow actually did a retest regen off this high, didn't get underneath it, wants to go back up and test into the highs. So the Dow looks more positive even than the S&P. The NASDAQ. Remember, the NASDAQ composite was this range had held in effect. We broke down here, and then we came back up into the range, went up and tested the highs, fell, came back down, did it again. All right, so it's twice we've been down here, and once again it holds, and it holds right at those lows. That's what the S&P did, that's what this did, and it does a complete reversal back up into it. Now you can also draw different ranges here. The one that I would draw would be this one, and it's not quite equidistant because that's usually the way I like to see them. And actually I probably could draw it a little bit closer using these highs, right? And then below, about equidistant if you do that. And it's right there. Either way, it's right there testing it. So tomorrow that's going to be the test on this one. Just like the S&P, you have a high volume high. And actually in this case, I don't think it actually was a high. I think it just missed it. 46.10, 14, 46. No, it actually got over it. So you have a high volume high, and you're getting close to getting into it. If you get into it, what happens? You're magnetized towards the top of it. Now, if you remember the last couple days, or I guess it was yesterday, I was saying that these are range trades now because we've gotten range trade setups now in the sectors and so forth. But you always have to say, okay, where's the range? Well, right now the whole thing is the range, so that means you can test right back to the top. It doesn't mean we have to keep a lower range, so to speak, right? I mean, this thing can go back to the top of the range. It's just that until it proves itself, it no longer is quote unquote, in an uptrend near term. I mean, this trend that's been in effect, still, if you look at a longer term time frame, it's still in effect. But lately it's been this, not that, right? It's been sideways. And this inability to hold, once you tested over the highs, right, and failed, the inability to hold, right, sets up a larger range, and that's what it is. And it's, came back down to this range. So, not, as we've talked about, it's not the end of the world until it really starts to fail. So far it hasn't. It got pretty close. It has done some damage though. It's done damage here. It's done damage in particular in the sectors. And the sectors are the ones that are going to lead these lower if in fact we're going to go lower. So the IXIC, just like the S&P 500, is going to try to trade back up into those bars. And if this one gets into the bar, it will try to magnetize towards the top of it. The NDX now is the strongest one. And this one, if you just want to watch one index, this is the one to watch because the highs are right there and it's not that far away and it's already into the bar. So it's already into the bottom of the high volume bar. This to me is probably the most important of the indexes we're looking at tonight because it's already in it, and that says it's probably going to try to magnetize towards the top. 41.1891, the previous high 41.10. It didn't close over it, so it was a failure to get, to stay above it. So it was a failed breakout attempt. Here we are coming back up. They're going to try again. Now, that's a lot of volume sitting at the highs. It's going to be hard to get over it. If these indexes are going to get those legs up, and remember we have, and I'll show it on this one, but it applies to almost all of them, we have ABCD structures to the upside, right, that have large extensions. If we're going to get to those areas, this is the index that has to lead them, and it has to break over the top. And we're going to talk about Apple here in a little bit, which is going to be a key component of either the failure to do so or the ability to do so. And we'll look at Apple in detail here a little bit later. Lastly, the Russell. The Russell, of course, has been the weakest. The Russell, it didn't do the best of all things today, but it did enough of a good thing. It did almost a takeaway bar. It actually had a little bit more volume as it tested lower. That's a negative. It was testing into these bars though. Remember, that's where it got into yesterday. So if you're comparing to those, you're actually less volume. So the Russell does look like it's going to try to bounce key area on it on the way up. I would suggest here to start with, and then of course this area up here where it broke down. So Russell, bounce going, can carry a little bit farther, and then we'll see what it wants to do. Russell is going to be pulled up or is going to lead down. It's not going to be the leader on the way up. You look at the strong on the way up, that's NDX. You look at the weak on the way down, that's the Russell. The Russell failed to push lower today, got into there, popped back out of there today, got into these bars, popped back out of them today. That's a positive short term. That can lead it back up. Actually, the bottom of this bar is a good bar, 1143.47. Okay, so that's the indexes. I alluded to the fact that the sectors all show, not all, but a number of them show bounces tomorrow. Same thing with world markets. That leads me to give you the conclusion tonight, just as I did last night, that I expected a bounce today. I expect a little bit of a continuation bounce tomorrow. Now, whether it holds by the end of the day is a different question, but I do expect it to try to extend at least early tomorrow. All right, let's move to the second part of the show, and that is Apple and its Bendgate. And Apple is it's an interesting stock because, you know, they up until, well, certainly when Jobs was there, he came back, right? They never could do any wrong. And if you remember, there was the antenna gate, right, where there was you know, supposedly bad reception, and Jobs went out and I remember very well, went out and you know, did his research, pulled the numbers, came out and convincingly said it's not an issue, right, and pulled all the data out and made it that way. I wonder if the current management is going to be able to do that with this whole Bendgate thing. And there was a spoof tonight. I don't know if any of you saw it yet. I'll pop over here. It was hilarious to me because I as a kid remember reading Uri Geller, and there was a piece out here. Here he is here talking about, and you know, he supposedly is able to bend. I actually had a book by him. He supposedly is able to bend things with his mind, right? And all things are energy, and supposedly he can do that, bend spoons and stuff like that. Well, he's talking about bending the Apple, you know, the iPhone, and saying that no, it's not that. It's the collective energy of all those buying the iPhones that's bending it. So anyway, it was a spoof. It was kind of funny, but the whole question here, and you know, more seriously, is, you know, what is Apple going to do about this Bendgate thing? And is it going to be an issue, or are they going to, you know, be able to sweep this under the table just like Jobs would have done probably? So let's look at Apple, and I want to spend just a little bit of time looking at it just from a technical perspective. So I'm pulling up the charts here. Let me get all three of them up. And the first thing I want to do is I want to go to the monthly chart. Now the monthly chart, it's up here testing these highs. Those highs were 172, you know, that was like 700 and something on pre-split. But it's 100.72 on the monthly. Now we're getting close to the end of the month. We've only got like, you know, four more trading sessions. And you're hanging up here now at 103.74 as a high. Close today was 101.75. So you're just over those highs. The volume's not there, and it's not going to be there. So the question is can you hold over them, or do you actually fall back under them this month? You got over them last month. You had no volume. This is a retest regen, immediate retest regen taking place on the monthly. The low is 93.71. The low over here, 96.14. I don't expect it's going to break that down, but if you're bearish on Apple, or if you want to be bearish on Apple, you actually want to see it fail and close lower than last month. Now, it won't be a 2-bar reversal. It will simply be an over/under. But if you get back under this number, 100.72, which is, we're not talking but a percent, then you would have a failure at the highs on a 2-month span there. Going to the weekly. On the weekly, the high volume were these 2 bars. The top, 103.74, that was the high. Then you actually came off that high with a little bit more volume, didn't set a new high. Go back up, you test 2 weeks now, and you can't get back to the high. Resistance is right above. You got this volume now sitting at the low on the weekly. It's going to be attracted to it if it doesn't break higher. So now, spinning over to the daily. The spike up, right, that got sold, and I can't remember, I'm trying to think, that wasn't the announcement. I think the announcement was this day. Yeah, I believe it was this day was the announcement. But it came off the highs with volume escalation. Then, right, then on the announcement day, which was the 9th, it spiked and did not quite make it to the high, right? And that's where all the volume was left, and you left the high volume low. So you don't have a high volume high, you have a high volume low. Now you go up 3 days after that, and you set a new 103.08, you set a new high, 103, no, actually you didn't get a new high, you just got as high, 105, almost 103.05, almost as high. So you still haven't set anything above this 103.20 is the key point. And now you're testing and testing, you still haven't gotten there. Folks, this has to get over this, and it has to get over this fairly soon, or you're going to come back and test this low at 96.50. Now, Apple's like 14% of the weighting. If Apple starts to go south, it's going to take the NDX with it. I mean, it doesn't have to. I mean, I've seen the index trade, the NDX trade higher with Apple going lower. But if Apple starts losing 2-3%, you can believe it's going to put a lot of pressure on the NDX. The converse to that is the IBB, which went up and set new highs today. So the biotechs are holding pretty strong. But going back to Apple, in this whole Bendgate thing, and can they come out? Can they address it? And you have not only this problem, they actually pulled their new operating system off because of bugs in it. This is totally un-Apple-like, right? Apple was supposed to be the ecosystem that was clean, was pure, and without failure. You pull something you just stuck out there less than a week ago. It seems to me like they're not nearly as tight a ship as they used to be. If that really turns out to be true, and if Apple no longer is pushing the NDX up, NDX is not going to be the strongest index that much longer, in my opinion. So that's Apple. That's something to be watching. Apple, I do believe, is going to have to break these highs for the NDX to break its highs. So Apple, if you want to look at one layer lower, watch Apple and see if they can address their issues and actually get something going to the upside. If not, I think it's going to be a problem for the NDX. All right, let's turn to viewer questions next. Let me see here. So the first one here is VIMC. This is a member sent this question in late today. Was asking me about it, and what was impressive and what was really cool was this member actually took some of the concepts we talk about, and we'll pull all three charts over. Some of the concepts we talk about in neoclassical thought, and that is the idea of multiple swing point breaks on multiple time frames. The member bought into this on the break of multiple swing points on multiple time frames, and I applaud him for recognizing that and doing that. So you had here the breakout. So this was the breakout bar, spikes up over it, right? And then gets a nice big spike, and look at the volume escalation, which is going to be important as we look a little bit farther. So that, he bought it right there on the breakout. Nice move. Here's the weekly. You can see it here as well. 518, breakouts here. You get the multiple swing point follow through. Remember, it's 2 to 3 bars to the upside. That's what you should expect on the longest time frame, which is your monthly. And right now you've got your monthly up just the first bar. So this suggests that you're going to see continued strength over time in this. That's one thing to remember. Here you got your extension 2 to 3 bars off of this time frame. And now let's pull back to the daily. So the question here is, okay, I bought into this at, you know, just over 5, got a really nice profit. Do I take profits now or not? Because today it was down pretty big, right? Down, let's see what the number's, down 12% today. That's a pretty big drop. Okay, so let's give the history here. Here was earnings. So here was the, oh, well, first of all, these guys are, you know, I don't know if they're based in China or not, but they're a surveillance company primarily selling in China and the US. They got a big bump on earnings, right? From here to there, 18% jump on earnings. Then what do? They fade right back in and they retest that to see that it's real. That top was 360. They come back into 358. It holds, and then it takes off. Consolidates, takes off again. Now, when you're looking at a chart like this, you know, if you came into this and you bought that breakout, you know, the first thing to recognize is this is a huge overrun already. And what I mean by that is your ABCD structure, and if I did the percentages, it wouldn't even be that high. But if you do your ABCD structure, this was a huge run. This thing, I mean, just take this price pre-earnings. 330. Where is it at now? 988, almost 10 bucks. That's a triple in what? Less than a month. 3 weeks. Folks, that, you know, that's tremendous run. So when I see something like that, I don't think there's anything wrong with this. I think it just went way too far too fast. Now, if you analyze it a little bit more carefully, this high, 938. This high, over it, where's the close? 935. You went over, back under, that's a test failure, higher. Leads to 3 consolidation bars, now the drop. In other words, if you can't push price higher, if buyers are unwilling to come in and buy more at higher and higher prices, you're going to go back the other way, and given this run, back the other way can be a big back the other way. So just realize when you get that kind of a move, you got to expect the same kind of thing on the way back. Now, the other thing that's important, and let me pull the weekly back over, and we talked about it on the monthly, is you had huge escalation of volume. When you have that, that gives you a range trade. So you have to expect this is your range. So that means to me this thing can come all the way back to the bottom of the range. It doesn't have to do it immediately, but it could, given the fact that it ran so fast so far. That bottom's 610. You're currently at 762. That's another $1.50. That's another, you know, I don't know, 10%. You know, it's another big number. It's even probably more. You've also got the big volume spike on the daily. That also creates a range trade, right? It probably is going to range trade. So in other words, it's going to consolidate here. So more than likely, the big move is already over. In other words, you know, it's going to take a while before you probably see more of that, because you've probably already seen it. So that tells me that what you really want to do is you want to try to take some profits up here somewhere and look to buy back down there somewhere. Here and on the weekly, which actually happened to end up being about the same price, I believe. You see, this low is 631. On the weekly, it's 610. So somewhere between 610 and 631 is the ideal place to try to pick it back up. So when you do that and you look at it that way, now you have your parameters. I want to try to sell somewhere up here. I want to try to buy back somewhere down here. So tomorrow, what I would be doing is I'd be looking to see how it trades right away. And let's look inside this guy. And let me pull up, let me see, VIMC. Let's see what it looks like intraday. So let's put it on a 60-minute. I've got it on 10 days. Okay, so this high volume spurt, that low was 820, and it's under 820. It's already broke it down. So this is 860. So the ideal place to try to take some money, if they give it to you, is up here. That's where you'd want to try to sell it. So if you get a bounce up into here, I would try to sell some of my shares. How much? That really depends on how many you got, what kind of risk preference you have, that kind of stuff, right? So that would be the ideal place, and I didn't quite draw it right. It's right there. That would be the ideal place to try to take some money. So that's what I would be, looking at and trying to do. So that's the first thing. Next thing is, if it doesn't give that to you, your intersection of these two bars is right where it is. So in other words, if you don't get back over this pretty early tomorrow, I would just take my money, right? And then just wait. So if I could get up here, if I could get the price up here, and let's say that you were going to sell half of it, I would sell the half if I can get up here. If I can't get up there first thing in the morning, I'd sell 25% of it right away. And then I'd try to get the other 25% here, and if it keeps drifting lower, then I would just have to sell the other 25%. So that's the way I'd try to trade that thing. I think that's your best bet. Great trade. Let's just try to maximize what you can out of that trade at this particular point. The real key, you did the entry perfect. The real key for you that you didn't quite pick up on is this whole idea of a range trade. If you have my third book, look in that third book about range trade setups and how they work, and you would have seen how this one probably was just that. Okay? All right, I'm out of time. I'm going to have to leave it at that. Thanks for joining me. Have yourself a great night. Tell a friend, tell two. I'm LA. This is and it was your daily TA wrap. Have a great night. See you next time. Good night, folks.